Hey traders, Akil Stokes here of Trading Power, and welcome to this week's weekend review video. I've got a lot in store for you today, including a recap of the week that was in my personal trading, a special sneak preview or sneak peek inside the six-figure syndicate in a video I provided for them earlier in the week, looking at trading psychology and basically how to look at a trade in a different light. I think you guys will really enjoy that. And then lastly, I want to respond to an email I got earlier in the week dealing with, looking back in the past and handling emotional mistakes and really just gearing yourself up to trade the markets. And maybe at the very end, if I have time, I'll share with you some of the trades that I'm currently involved in. But sit back, grab your coffee, and enjoy the show. All right, gang, welcome back. Now, before we get started, I want to apologize for last week's video. Usually I try to put out the most quality material as I can, and last week it was just, I just feel like I shortchanged you guys. My heart wasn't in it, my head wasn't in it. I got beat up in the markets during the week. It was a rough time, and I didn't want anything to do with a chart or anything traded related until I get my mind together and just take some time off. This week, I'm back at it, entered the market, I retooled over the weekend, and really got ready for what I thought was going to be a rough week. And you can see the facial hair is growing in a little bit, and that's an old trick I use from my football days when I know I'm going into war. And obviously, this is not the same as war, and I don't want to offend any of you guys that actually been in war, but, to get mentally prepared for a tough week, for a battle, I like to let the beard grow a little bit. And maybe it's a self-fulfilling prophecy, but that's exactly how the week was. It was a fight, and it still is a fight. I've got about 4 trades on the board. Currently, 3 are very large by my standards, so it's definitely not over. But currently, I'm sitting up about 100 pips in the market, and really, it's been a back and forth type of week. It's been a winner here, a loser there, a winner there, a loser here, a winner there. And it's been a grind, but you know what? That's it's kind of how I like it. It makes you feel good when you have that. When you have that type of battle and you come out on top. Now, luckily for me, you guys are probably saying, "Well, Kill, winner, loser, winner, loser. How are you up 100 pips?" Well, here's a little secret for you. I don't want to say real professional traders, but the majority of professional traders out there aren't winning 80% of the time. Now, there are some. I know a few traders that really pick and choose the market, the best of the best of the best opportunities, maybe 1 or 2 trades a week or 1 or 2 trades a month, and try to capitalize as much as they can off of that. But most of your traders are going to be around 50, 60%, at most. And the key is that risk-reward factor and setting yourself up with a good risk-reward, meaning that you're risking, on average, you're risking less, meaning you have a chance of losing less on average than what you have a chance of winning. And because of that, again, I'm able to be about a little over 50% this week and still be in profit. Now, again, I can't be excited about that. We still have Friday coming up. Again, I have a bunch of big positions on the board. But up to this point, I'm happy at myself, especially coming off of last week, about how I've done. Now, with that being said, it's been very close to being a monster week. Literally, I've been 2 pips away or 2 ticks away from this being an extraordinary week so far. And the 2 trades I'm talking about, syndicate members, you may have experienced the same thing, but they came on Aussie Swiss and Aussie CAD, where one was a cipher pattern, one was a bat pattern, and the market came within a single tick of hitting my entry, or triggering my entry, I should say. And of course, it came within that single pip, waved to me, said bye, turned around, went up to hit would-be target 1s and target 2s for what would have been another 160 pips in the bank. Now, why am I bringing this up? Am I sore? Am I sour? Am I saying, oh man, I woulda, coulda, shoulda been up this much? No, it's trading. I've been doing this long enough to realize that, guess what? It happens. Sometimes you're going to be on the bad end of that where you just miss out. Sometimes you're going to have the market come down within a single tick of your stop loss, turn around and go up and hit you targets. You deal with the punches as they come. There's no secret trick to avoiding it. It just happens. However, a lot of the traders I work with, especially the newer clients, well, a lot of the newer clients I work with, they're always under the assumption that something can be fixed, and this is the route they often take. Akil, I missed my trigger by 1 tick. All right, so what I'm going to do is now, instead of entering my orders here, say at the 786, I'm going to enter them 3 pips or 3 ticks before the 786. Works good for a little bit. One day the market comes down 4 ticks above the 786. Ah, man, Akil, I missed it again by 1 tick. All right, instead of 4, I'm going to start entering 5 or 6 pips ahead just to make sure I get in. And you can already see how this scenario plays out. And I had a very good trading friend of mine, actually one of my best friends, the one that introduced me to trading. He made this mistake a lot. He got missed on some of these trades, and he started front running his orders by about 5 ticks on the entry, and then about 5 ticks on stops, and it went to 10 on the entry, 10 on targets, excuse me, not stops, targets. And before you know it, he was chopping off 10 pips of potential target. He was chopping off 10 pips of where he entered at. So he's given up about 20 pips on each trade. And really, as a trader, when we do our back testing, we do it hours and hours and weeks and months of back testing. When we find out if our system has a positive expectancy, unless you're counting giving up an extra, unless you have a 20 pip cushion in there per trade over however many trades you're taking per year, which would mean you're very profitable to begin with. Unless you're taking that into account, that's probably going to flip your expectancy, probably going to invert your expectancy, meaning that where before your average trade has a positive expectancy, now your average trade, because you're cutting yourself short, is in the negative, and that's something that you want to avoid. However, that's a trap that a lot of traders fall into, and then they come to me saying, hey, I've been trading Gartley patterns or bat patterns, and they're just, you always say you're making money off of them, and they should win this amount of the time, but I'm winning 60%, but I'm not profitable. Or I'm winning 70% of the time, but I'm not profitable. What gives? Well, are you taking targets off early? Yeah. Are you entering early? Yeah. There you go. So I want to bring that up. Now, as I mentioned before, let's get straight into this video. I gave it to syndicate members, I think, on Tuesday. It talked about the Aussie dollar. We were making predictions in the live room on the Aussie dollar on what the potential move could be, identify, predict, decide, execute the normal routine, and really gave the traders in the room a different perspective on how to look at the market. And this is a theme we've been doing for the first, really this year in 2014, working more on how the market is really just a visual representation of the psychology of everyone out there. So if you can look at the market and think that way, it's going to give you maybe not an edge, but it's going to allow you to understand more of what's happening. So let me know what you guys think of this. If you like it, leave me a comment saying, hey, Akil, this was good, because I am an educator and I am looking for, different ways to connect with you guys better. Everyone learns differently. So the more, not tricks, but the more ways I can make things make sense, the easier it is for you guys, and then the better educator I become. So let me know what you guys think of this video, and I'll see you guys in a little bit. All right, so we just wrapped up Tuesday's live room session, first live room session of the week, and no trades taken today. Well, no day trades taken today. We actually have, I just closed down the room. I don't trade after my live room. I trade from 8 o'clock to 11 o'clock New York Eastern time. After that, no more orders on the lower time frames. But we're actually looking for a 26.18 opportunity here on pound dollar. You can see we have a double top here. We've got a retracing back up, and well, if you're signed up for Jason's free training on April 15th, you'll learn all about this. But again, I would be filled right now. I was going to do something a little different with it, with targets, because the risk reward didn't meet my profile. So we talked trend continuation and extended targets and how to do that. But again, ran out of time. 11 o'clock came, did not get filled. So orders are off the table. And if you're a day trader, that's how you have to be. You can't get stuck up on catching every move, because you're going to end up being in front of your chart for hours and hours and hours a day. And that's something that you don't want to do. Now, I was able to bird dog off a trade. One of the members of our live room, Tim, who's been here for a while, so I trust him with charting, brought us over to the pound CAD, I think on the 60 minute here, pound CAD. And what it was a Gartley pattern that was a lot deeper than the original completion. The original completion was right here at 83.04. What happened is he identified it, or maybe I got a chance to look at it, Once we got up here, you can see around 83.24. So instead of having an initial risk reward that, if I would originally took the trade, my risk reward would have looked like this. I would have been having a reward of this much. I'm going to move these up to 82.70 and 82.30. My stops would have been still right here, but my original risk reward would have looked like this now as the trade has moved. And now let me go and make this red for risky and green. I don't know anything fancy that rhymes with green, but green for money, green for guap. There we go. But because I was able to get in a little higher and bird dog off of this trader's idea, and hopefully some of the syndicate members were able to catch this too as I shot this in, we're now looking at a risk profile of about that in red. We're looking at a potential reward of about this in green. And it doesn't take a genius to see that this is a much better situation than it would have been if I got the original entry. So I'm not saying you should wait for Gartley patterns or any pattern to complete a lot higher to get the best risk reward, because a lot of the times these patterns do hit the 127 and just collapse right over. But sometimes it's not a bad thing to be late to the party. And this is an opportunity of that. Lastly, and I may save this next part just for syndicate members, I'm not sure. Lastly, we did a lot of analysis on Aussie dollar 5-minute. We're actually looking for a trend continuation trade down here on the range bar chart. We had some hidden diversions, but again, live room closed and still wouldn't have had the opportunity to get involved yet. But taking a look at the higher time frame, we really broke the Aussie dollar down, and we talked about just a different way to look at the market with buyers and sellers. And we've been doing this for the last, really this year a lot in the live room. My theme has kind of been think like the other trader. You know, how would another trader think? And here's what we did. I'll probably end up cutting this out and giving it to syndicate members, making this a midweek lesson. Sorry, weekend review viewers, but they get first dibs. I have an obligation to them, our proud syndicate members. But we looked at Aussie dollar 4 hour, and we were saying to ourselves, well, actually, let's go down to a bigger picture. We're shooting for up here. You know, we've had double tops here. We caught a nice little cipher and double top trade last week here. We had triple tops, actually. We just broke and closed above there. Next structure level is up here at 94.31. Went down to a 60-minute chart. We identified something else. We said, look at that. We've got a potential harmonic move here, a potential ABCD pattern. Looking at A to B, B to C inside there, C to D. Now, I broke the room in half. I said, let's pretend. I took about 10 of the live room members. I said, let's pretend Gary and Gene and John and who else are up here. And they're ABCD pattern traders, right? So what's resting up here? Right? They got some sell orders up here. Now let's put ourselves in the mind of them, right? Say they're selling up here. Say the market pushes up to this level. We get a lower low, lower close, or a double top, whatever their entry technique may be. Where are those traders looking to take targets off at? Well, I know at least how we teach the ABCD pattern is we're looking for target 1 at a 382. And if we're going to get second targets, we're looking for second targets here at a 618. Even if you're a little more conservative, our conservative technique, we're looking for target 1s, 382, right here. Target 2s, 618, right? So if those traders that are selling this ABCD pattern get filled, they're getting short, what are they doing right here? They're taking targets. If you're selling a trade, how can you take targets? What do you need there? You need buy limit orders, right? So thinking like the other trader, thinking like the opposite trader, guess what? We got to assume that there are a lot of buy limit orders here, not only because this is a retest of structure, boom, resistance, 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 break and close above, support. So there's probably a whole bunch of other buyers there as well, people like myself. But the people that are selling from up here, they're probably taking off at least a portion of their position right here, flooding the market, or what we would assume would flood the market with some buy orders. So is this an area that we want to look at to get long? You know, I don't know about you, but I can't move the market by myself. So I want to look for the areas where I assume other people are resting and basically hop on the bandwagon. All right, so we did a whole little conversation about that, which was pretty cool. And there's another level of buy orders down here, but setting this up for a potential trend continuation trade. Again, we're going to see if it actually reverses first, but using the higher time frame prediction of we're going up to that, I think it was 94.30 something level. Using the higher time frame prediction of us going up to that 94.30 something level, the next question is, how can we get there? We can either go straight up. If we go straight up, then I'll look for a selling opportunity up there. If we were traced back down, then I'll look for a chance to hop on the underlying trend and take a trend continuation trade up there. I don't care what the market does. I really don't care, guys. It doesn't matter, because I have a game plan for if we go down, if then thought process. If we go down, I'm looking to do this. If we go up, I'm looking to do that. My job is to sit back, fold my hands behind my head, kick my feet up, and just wait. And then, of course, follow my rules once it gets there. So no trades in the live room today, but a very educational day. I like this video. I'm going to shoot this over to syndicate members right now. So you'll get a little training. I'm not sure if Jason talked about this in the morning thoughts video. And weekend review members, well, maybe by the end of the week, we'll actually see this move occur, and we can take not a live look, but we can take a look at what happened if it actually hit this level. All right, again, I hope you guys enjoyed that. And if you did, just leave me a like, leave me a comment saying, hey, this type of stuff really clicks with me. I'm going to try and rush so this doesn't end up being a half an hour video, but I did want to share two things with you before we leave. The first is a comment I got on a blog post that I did the other day called I Needed to Do This, where really it was a chance for me to self-reflect on the week that was. And as you recall, I said last week I got banged up pretty bad in the market. So one of the ways I get geared up for the next week and kind of get it off my chest is by writing it down. And that's really that's really how I got into the educational field in the first place. And then after that, I want to share with you one of the trade that we took in the syndicate this week, and kind of related to what we talked about earlier about moving targets and moving entries. Now, the comment from this blog post, and I want to preface it by saying this is a guy he's been viewing the blog or viewing my articles for a while, enjoys it. So he's not one of those internet trolls that goes out there and just bashes everything, just giving his opinion. He said, just read it, and I can say that this is the first time I've been truly disappointed with this latest series of blogs to date. Now, don't be confused. I still hold that Akil spouts many words of wisdom. Thank you. The disappointment is in the statement, the past is the past, etc. My point is that if you're a foremost a structured trader and you're looking at your own personal performance and graphing your progress, that it may prove beneficial to dwell more on the past performance with the possibility to improve and modify the current set of rules carefully crafted over time. After all, automatic black box systems fail over time and need retweaking. Likewise, your trading plan. And I agree 100%. And the blog I mentioned, again, it was a rough week. I said, you know what? I need to erase that rough week from my mind and focus on the next week. And now, when I say erase it from my mind, I don't mean we don't want to forget what we do. Here's one thing that I do every week, and it's part of my trading routine. After every week, and really after every day in day trading, but after every week is over, I go back through every single trade I took during the week and basically grade myself on it, evaluate myself on that trade. And the one thing I'm looking for, I don't really care so much if it's a win or if it's a loss. If I see something specific, I may jot it down, like say, hey, missed the structure level here, or wasn't aware of this type of candlestick. I may write that down, and over time, if I notice a pattern of that, that may be something I switch in my rules. But for the most part, I want to see if I did anything wrong. Did I make a mistake? Was my entry correct? Was my rationale for trading correct? Were my targets correct? Were my stops correct? Were there anything that I did wrong in this trade that could have not caused it to lose, but could have I guess could have caused it to lose, where it would have been a winner, it would have been something I stayed out of. And as long as that answer is no, then I say, you know what? Hey, it's just the market. And I want to erase any disappointment, any frustration, any greed, any anger. I want to erase all those negative emotions from my mind and come into the next week with a fresh pair of eyes and a fresh mindset on trading. So it is true. We do want to evaluate our system, our strategy. We do want to evaluate our trading, because if we notice something over time, we want to make the adjustment. If we notice that, hey, every time I enter this way on a double bottom, the market does that. And if we're seeing that, 10, 20 times over the course of our year, eventually a light should go off to say, okay, maybe I should try this instead, since the market has given us a pattern of this happening. That's when you want to adjust it. And I believe in that. Kaizen, continuous improvement, always evolving towards the future. But also, and that takes time. I usually do that big review every quarter, so every 3 months. But also from a psychological standpoint and an emotional standpoint, we kind of need to leave the past in the past. Last week, I was angry at the markets. I was frustrated at the markets. I never let myself get to the point where I want to do greedy trading or revenge trading. I don't let myself get to that point. But in the past, that's how I would have felt. And I would have came into this week like, you know what? Dollar yen came up and stopped me out for 90 pips, then rolled over towards my 130 pip targets. I missed out on it. I'm going to get revenge this week, and I'm going to trade everything. Get angry and try to get after it. That's what we need to leave behind. We don't need to come into the market with that mindset. We need to come in with a clear pair of eyes, because, one of the things I tell my traders is, in trading, especially if you have a lot of strategies that you trade, you can give yourself a reason to trade at basically any given point in the market if you want to. We could look at any chart and say, this is a valid bull or bear entry at market. You can trick yourself into, and believe me, you can trick yourself into believing that. And if you're emotional, if you're greedy, that's what you're going to do. So again, we want to come in with fresh eyes. Now let's go to the chart real quick. I want to show you guys, I don't know what I want to show you guys. Let me bring up the trade floor, see what we talked about this week. We've got a lot in here. Swiss yen, Aussie dollar, dollar CAD, pound Aussie, dollar Swiss. Let's go to Aussie New Zealand. Let's get this out of here. Go to Aussie New Zealand. Look at that, already up here. Aussie New Zealand. Let's go to a 4-hour chart. Aussie New Zealand was a cipher pattern that we took here, and I actually made a mistake on this pair with one of my accounts. The account that I managed for someone else, I made the right call, took the profits out, made that person money, didn't do it for my own self, right? Come on, Nikhil. But Aussie New Zealand here, we had a cipher pattern. And if you guys are in the syndicate, Jason broke this down all week as well. We had a bat pattern inside of here, a 26.18 trade, which ended up being a winner. There's a lot that happened within basically right up here in the congestion, the C point or the D point of the cipher pattern. But here's what I want to bring to you guys. And let me just erase this off the board. It goes along with our conversation of earlier about taking targets off early, taking stops off early. And this is a scenario where I actually did so, again, for the other account and not my own account, and where it would have paid off. And, there was Jason brought up a good message in this week's private client group meeting about trading and evolving as a trader, and how, it's just like driving a car or riding a bike. You really don't you don't really understand how to drive just by passing the driver's test or training with your mother or father or brother, whoever. You really don't learn how to drive until you've been on the road for a good amount of time. You start to see all the other crazy drivers out there, and you start to recognize trends. You start to say, okay, I know this guy's going to pull a left turn without putting on a turn signal, and you start to realize that. That's when you really start to learn how to drive. Trading's the same way. You come into trading with strict rules, but as you evolve as a trader, you start to notice things, and usually it comes, at least for me, by not losing money, donating money to the market for future education. Usually it comes in that form. And here's what happened with Aussie New Zealand. Our original entry was right here at 108.14. I think I got in 108.09. And originally our targets were down here at 107.18, 382 Fibonacci retracement. But what I noticed is that, look left. What do we have? Look left. Right here, right before that 382, we've got a little itty bitty structure, minor structure level right here at about 107.37. So if my initial targets being that, again, what was it, 107.21, I think they were. We have a structure level at 107.39. What I did was I adjusted my targets up slightly, a little bit, to get right on this structure level, because Well, in the past, this has gotten me before. There have been plenty of trades which come down. There's a structure level right before my target level. It's come down to hit that level and then bounce back up. And lo and behold, this one did the exact same thing. So my personal account, I didn't move them. I moved them now, but I didn't move them at the time. You can see I went from plus, I think 70 something to down 25 now, still holding this trade. But in the other account that I managed, I actually moved these targets up to here. You can see the market came down, nipped it twice, 1, 2, couldn't get through that level before bouncing back up. He bounced back up with the, we had the Aussie news last night that came down and couldn't get past this level. And that's a mistake. That's something that, talking about the journaling, that's something I need to go back and write down. But as you evolve as a trader, that's some of the things you start to build into your plan. Hey, if structure level was within blah, blah, blah of my targets or my fibs, then I default to structure-based targets instead of fib-based targets. And we can go on for a long time about this, but I got a feeling I'm already about 20, 25 minutes on this video, so I'm going to leave it at that. So thank you for joining me for this long video. Hopefully this makes up for last week. Again, if you like what you see, do me a big favor, because it takes me a long time to produce this thing. I'm talking hours, and that's not counting the recording. Hit the like button, hit the share button, hit the subscribe button, and just continue to support this video. We've got some big events coming up too, so if you're not subscribed, you're not going to hear about it. And I'm talking 2 massive events on the horizon that I really wish I can tell you about, but I can't. So you'll have to join me next week and the week after for that. Until then, plan your trade your plan. Good luck in the markets for the remainder of the week. Have a great weekend, guys, and I really appreciate you joining me once again. I'll see you next time.